Welcome back to Stocks Telegraph, your go-to source for the latest stock market insights and analysis. In today's video, we're diving into AT&T, ticker symbol T, one of the most recognized telecommunications giants globally. With its current low price and potential for steady dividends, many investors are considering whether AT&T is the best low-cost stock to buy right now. However, given the challenges facing the telecom industry and the company's recent financial performance, is it truly a smart investment choice? Let's take a closer look at AT&T's current standing, its financials, and what Wall Street analysts predict for its future. If you're enjoying this analysis, don't forget to hit that thumbs up button and share this video with friends interested in the stock market. We'd also love to hear your thoughts. What's your take on AT&T's potential as a low-cost stock? Drop your comments below. And if you haven't already, make sure to subscribe to Stocks Telegraph and ring the notification bell so you never miss our latest stock analysis and market updates. Thanks for watching, and let's jump into the details. First, let's examine AT&T's financial standing. Currently trading at $22.49, analysts have given it a mean recommendation of 2.21, indicating a hold rating. Year-to-date, AT&T has performed well, rising 34.03%, with a modest 4.17% increase over the last month. Notably, the stock is just 0.67% away from its 52-week high, reflecting growing investor confidence. From a profitability perspective, AT&T boasts a gross margin of 43.57% and a profit margin of 10.25%, demonstrating efficiency in managing costs and generating profits. The company has delivered a return on investment of 5.05%, and analysts expect EPS growth of 2.72% next year, signaling slow but steady growth. Additionally, it's trading above its 50-day simple moving average by 6.66%, which indicates positive momentum. Now let's dive into AT&T's recent third-quarter results. The company showcased consistent growth in key areas, particularly mobility service and broadband revenues. Total revenues reached $30.2 billion, highlighting its ability to generate strong top-line growth. Although diluted EPS came in at $0.03 due to one-time charges, the adjusted EPS is much healthier at $0.06. AT&T's operating income was $2.1 billion, and when adjusted, it stood at a robust $6.5 billion. The adjusted EBITDA of $11.6 billion further illustrates the company's financial health and profitability. Mobility service revenues grew by 4% year-over-year to $16.5 billion, and AT&T added 226,000 fiber customers, leading to a 6.4% year-over-year rise in consumer broadband revenues, totaling $2.8 billion. With 28.3 million locations now reached by fiber, AT&T is well-positioned for future growth. Looking ahead, AT&T's outlook for the full year remains optimistic. The company anticipates wireless service revenue growth of about 3% and broadband revenue growth exceeding 7%. Adjusted EBITDA is forecasted to grow by approximately 3%, reflecting stability in its core operations. Capital investments are projected between $21 billion and $22 billion, while free cash flow is estimated at $17 billion to $18 billion. For the year, adjusted EPS is expected to range between $2.15 and $2.25. Additionally, AT&T aims to achieve a net debt-to-adjusted EBITDA ratio of 2.5x by the first half of 2025. The company is also on track to extend its fiber reach to over 30 million consumer and business locations by the end of 2025, a crucial component of its growth strategy. In a significant move, AT&T has ratified new agreements with the Communications Workers of America. These agreements affect approximately 23,000 employees across 11 states and include substantial wage increases. Employees in the West will receive at least a 15% wage hike over the next 4 years, while those in the Southeast will benefit from a more than 19% wage increase over 5 years. Additionally, some workers in the Southeast will see an extra 3% boost, thanks to the infrastructure bill. Moreover, AT&T has reached a crucial agreement to sell its remaining 70% stake in DirecTV to TPG, marking its final step out of the satellite TV business. This sale, which is non-contingent and only subject to customary closing conditions, allows AT&T to focus on its core businesses, wireless 5G, and fiber connectivity. Over the past 3 years, AT&T has received cash distributions from DirecTV totaling $19 billion, and this deal is expected to bring in an additional $7.6 billion, enhancing its balance sheet by accelerating expected future cash flow. The transaction is anticipated to complete in the second half of 2025. In addition to these strategic moves, AT&T has reaffirmed its commitment to returning value to shareholders with a quarterly dividend declaration of $0.2775 per share. This includes dividends for preferred stocks, such as $312.50, 5.000%, perpetual preferred stock, Series A, and $296.875 for the 4.750% perpetual preferred stock, Series C. These dividends, payable on November 1, 2024, to stockholders of record as of October 10, 2024, provide a steady income stream for investors as AT&T navigates its growth strategy in the wireless and broadband markets. In conclusion, AT&T Inc. is positioning itself as a strong player in the telecommunications sector. The company showcases consistent revenue growth in both mobility services and broadband, alongside a solid financial outlook for 2024, including expected revenue growth and significant capital investments. Recent agreements for wage increases and the strategic sale of DirecTV indicate a commitment to strengthening its core business and enhancing shareholder value. Coupled with a reliable dividend, AT&T could indeed be an attractive low-cost stock for investors seeking stability and growth potential. Thank you for watching this episode of Stocks Telegraph. If you found this information helpful, don't forget to hit that like button, share your thoughts in the comments, and subscribe to our channel for more insights into the stock market. Share this video with friends who might also be interested in low-cost stocks. Stay tuned for more updates and analysis on the stocks that matter to you.